Good afternoon, everyone. Good to see everyone. Hello, Jack. There's John. How are you?
Oh, sorry, I was on mute there. I said, "Hey, Hogue, good. My hair's nuts, so I'm wearing a hat. That's all I have to report."
It's what I usually do too, is put on a hat.
It's a versatile piece of equipment. Yeah, first, before we got started, on Monday, I believe, we'll be sending out an email that will have links to the videos plus the worksheet that may be unveiled today. But in the meantime, because I'm sure people are going to ask, I have a request to make out there. If somebody in the Q&A section, whoever does it first, no big deal, will just ask, do you have the recording from yesterday? The answer is yes, I do. Okay, perfect. So no more questions. I see I have one in here. Will this be recorded? And I will type the answer, yes. You will get an email Monday with both, but I'm also going to include a link to the unlisted video from yesterday. So if you want any recording so far, go to the questions. Give me 1 second here, Hogue.
No problem. Take your time. Yeah, I got a bunch of emails yesterday, like I didn't get to go or whatever. So I've emailed it out to a few people already.
All right. So if you go to the answered questions, you should see the link to yesterday. So hopefully that's our ragtag way to make this work.
There it is.
Once again, if you have any questions, me and JD are going to get off the camera soon, and we'll answer any questions we can in writing. If you have questions, try and put them in that Q&A section. It makes it easier because this chat will just keep going by, and we may not see things from earlier. So that's the best way to get our attention. And many of the questions will probably be answered at the end when we do sort of a Q&A. So with that, Hogue, the dance floor is yours.
Thanks, gentlemen. All right, welcome everyone. As Jack mentioned, we are going to have a present for you at the end of the session today, and then afterwards we're having a big party. Everybody's coming to my house. I guess we got all the notes here. Let's just jump in. This is me, the middle-aged performance coach. I see Dan's here from Branson. I have some friends near Branson, Table Rock Lake. I go there quite often. 39 years of futures industry experience, about 30 about 30 years as a relatively active trader, traded on the floor of the Mercantile Exchange for 20 years, migrating to screen trading in 2009. And since about 2011, 12, been here at Topstep, helping traders to expand their knowledge a little bit. And that's really the goal for today. I did this yesterday. I'm going to remind everybody today, the purpose for this webinar is not to confuse. Trading is difficult, period. There is a tendency to overcomplicate trading by seeking more and more information to aid in the decision-making process. I've seen a lot of people with a lot of indicators, lines, fibs, everything on their charts, and it just seems to overcomplicate things, while we also encourage people to try and keep things simple. The goal of this is not to complicate things. It's to expand your vision and to be able to create muscle memory so you can recognize these situations as they kind of unfold. The content in this series may seem complicated. It is meant to again, creating you the ability to build muscle memory to allowing you to absorb certain information instantly while keeping your windshield simple. Windshield meaning your charts, the things that you're looking at all day, every day. However you view the market, whatever lens you choose, I hope this helps you see in depth with 3 dimensions instead of just 2. Much of your ability to see is in your preparation, and that's a lot to do with the worksheet that we're going to be providing to you on Monday's email. We're going to go through it a little bit today. And again, I don't wish to complicate, only to expand the amount of information you can digest with less effort. And there are going to be some things yesterday with the market profile. I'm sure there's some things that you hadn't thought of, and there's going to be some things that you might want to start thinking about moving forward in your trading process. The auction process. What is a market? every futures market, everything that can be bought or sold is in the process of a two-sided auction, a two-way auction. When we look at any of these markets, the market's job is to facilitate trade. It is to be able to see buyers and sellers transacting business easily and readily. Price in the auction process may move higher in search of sellers and lower in search of buyers. This auction process lives in every time frame. There's the monthly auction, the weekly auction, the daily auction, the 30-minute auction, the 15-minute auction, the 5-minute auction, the 1-minute auction. It's all a part of the process. There are two types of auctions. There's the English auction, which I think most people are familiar with. The price starts low. People compete to bring price to the level where the last person will pay the highest price. And then there's the Dutch auction. We're going to discuss those a little bit in depth. We're going to have a little bit of an exercise today that we might find interesting and hopefully fun. So when I look at the auction or the auction process, anything that I'm viewing as a product that I'm interested in trying to profit from, I'm always reminding myself that it is part of a long time frame two-sided auction process. The features that I focus on as part of this auction process are, of course, structure and time. The charts are going to create the structure that are going to be able to tell us if the auction is up, down, or sideways. Time is the advertising mechanism of the auction process. As price stays at a level for a longer period of time, it is accepting price, again, the advertising mechanism at that level. Volume, open interest, and price action, order flow, momentum. I kind of group all those together with thinking about the auction process as a four-legged table in this way. If something is missing, if there is a leg on this table that is removed, the table falls over. So I think it's important to monitor the auction process and all four of these legs or all four of these factions of the auction process. Volume and open interest. Volume, as I'm sure we're all well aware, is the total number of contracts that trade in a given period of time. All of the volume in the S&Ps and the crude oil, it tells you how many actual transactions were taken, how many contracts had traded hands in that period of time. If we're looking at a single day, that's one way to look at volume. You can look at volume in shorter time frames as well. But when we think about volume measures the pressure of and intensity of price movement. Again, something you can look in short time frame, longer time frames. There's all kinds of ways to measure volume. There's bar volume, there's volume profile, there's price volume, there's time-based volume. We're going to be looking at a couple of them today. The point being is volume drives price. If volume is driving price higher, buyers are more aggressive, sellers are not. The opposite, if price is moving lower on higher volume, the sellers are more aggressive and the buyers are not. What is open interest? Open interest is the total number of outstanding contracts that are held by market participants at the end of the day. It's similar to shares outstanding. but shares outstanding, if you're trading stocks, are finite. There's only a certain number of shares outstanding unless the company issues more stock or they have a stock split, something like that. Open interest is a little bit more fluid than that. What creates a contract in futures and options is one buyer and one seller. That is a contract. The buyer is agreeing to take delivery of that product at a specific time in the future at that specific price. The seller is providing the product at that specific price at a specific point in the future. So when we look at open interest, and we're going to be looking at a spreadsheet that's going to kind of show how open interest changes, it's not the total number of buys and sells, of longs and shorts. It's just one or the other, because you can't have a contract without two parties, both of them agreeing to a specific outcome, a specific, what's the word I'm looking for? Execution, I guess maybe that would suffice for it. So volume is the number of contracts traded. Open interest is the number of interested parties. If I'm long or short, I'm interested. But remember, open interest is one long and one short is one contract. If I buy 10, initiating a position against somebody who sells 10, initiating a position, we increase open interest by 10. If I exit those longs against somebody who is exiting shorts, we remove open interest by 10 contracts. If I'm long 10 and I sell that 10 to somebody who is a new buyer, we don't change open interest. It's different than volume. It's the total number of outstanding contracts. If you know futures markets, you know that these are contracts. It is a zero-sum game. There is equal number of longs as shorts. Those are the contracts. With the end of the trading day, there's exactly the same amount of money is made as is lost. There is no value creation in futures. In stocks, you buy a stock at $1 and the price goes up to 10. There has been value creation there. Futures does not create value. It's one of the reasons why I think it's so difficult to succeed in futures, is because there is no value creation. The money that is made is lost, and the money that is lost is made exactly to zero at the end of every session. So the auction, we're going to just do a little bit of an exercise here. And we're going to auction off this oil painting. This is a Leroy Neiman oil painting of the floor of the Chicago Mercantile Exchange. Leroy Neiman, I don't know if anybody knows about him anymore, but he was a very prominent artist, and he was at the Merc and did this whole painting of it. If everybody in this meeting is part of this auction, and I'm the auctioneer, I'm going to bring out this painting and I'm going to talk about how important this painting is. We've already got a bid for it. Look at that. We've got this painting. It is a painting of the Chicago Mercantile Exchange. You can see, as you get closer to it, in the trading pits, you can see the arms waving. You can almost hear the trading floor here. You can almost smell it. You can see the price boards all over. You see the flags hanging off the ceiling. You see the people running around. It's a very active picture. It's a very active painting. And we're fortunate to have this with us today, because you don't often see Leroy Neiman pictures for sale that much. So I know we have Peter at bidding 100, but we're going to open the bidding at $1,000. We already have one from Steve Nadeau. It's good to see you, Steve. We're not going to necessarily bid in the chat room here, but at $1,000, everybody in this meeting is interested in bidding for this piece of artwork. It's dirt cheap at $1,000. All of your interest in this, if everybody is interested in bidding for it, that's the open interest. Now we've set the opening bid at 1,000. If everybody is interested, there's going to be a frenzy of new bids, higher bids, as price continues to push up on this piece of artwork. We're at 1,000, we're at 1,100, we're at 1,200, we're at 1,300, we're at 1,400. Paddles are flying. Everybody is trying to bid for this piece. Now it's up to 1,500, 1,600, 1,700, 1,800, 1,900, 30. The more people that are bidding for it is the volume. If everybody in the room is interested, that's the open interest. As price moves higher, fewer and fewer people are going to remain interested in bidding on this. It may not slow bidding just yet, but now we've got about half the room at $2,000 saying, I don't want to pay that much for it. They've bowed out of the auction process. They've reduced the number of open interest that are interested in purchasing this. The rest of the folks that are still here are still bidding for feverishly. 11 to 20, 2,100, 2,200, 2,300, 2,400. The auctioneer me is having trouble keeping up with the bids. We're up to 3,000 now, and now there's only about a quarter of you left that are interested in continuing to bid for this piece. Open interest has fallen off. We finally get up to about 3,500, 3,600, 3,700. Now the volume has fallen off in this upside auction. We're at 3,700, and now there's some trepidation. There's only a couple people still willing to bid. Finally, somebody, Steve Nadeau says, I'll pay 3,800. And the auctioneer is going to say, well, okay, 3,800 is the bid. Do I hear any more bids? Do I hear any more bids? Any more interest in paying in anybody else getting this piece? Now, the auction could end right there. Sometimes in the auction process, a new bidder will come in and reincite the frenzy on this piece. Somebody in the back of the room says, I'll pay 4,000 for it. Everybody turns and looks at him. And as the auctioneer, I'm going to say, we have a new bidder in the room, a new buyer. Everybody says, what does he know that we don't know? So there's a group of people that were ready to give it up at 3,800 that now have to bid higher, and they bid higher. The auction looked like it was going to end, and then a new participant came into the marketplace and continued the auction to the upside. Now we're up at 4,100, 4,200, 4,300, 4,400. Do I hear 4,600? 4,600, the volume dies. Fewer people are interested. All right, it's sold for that. So there's an example of how in even these futures markets, watching volume and open interest can indicate potentially the end of an auction to the upside and then create another auction to the downside. If Jack, who bought this piece for $4,800, stands up and says, I'm going to be all right selling this to anybody here who wants it for $5,000, he's not going to get any bids. He's going to have to auction price lower and lower if he really wants to sell it at a loss until finally somebody says, yeah, I'll buy that. And I'll bet you people aren't going to be quick to bid for that. They're not going to be too quick to jump on that. The up auction we just experienced is an English auction. The Dutch auction is the opposite. They price it too high and move price lower until somebody says, I'll take it. Does that explain a little bit about how even futures markets take the stairs up and the elevator down? Structure and time. What we're looking at here is the 30-minute chart, the 5, the 15, Heikin-Ashi, point and figure, 2,500 tick chart, Renko, and the volume TPO and volume profiles. They are of the same time frame. Basically, this 30 minutes, you see this spike up here. This is the 5-minute. On the 1 minute, all we see is the way down. Heikin-Ashi's, point and figures, we got the move up, we got the move up, we got the range bound activity at the high here. 2,500 tick chart. Well, it looks kind of like a 5-minute, right? Renkos and profiles. When we are looking for acceptance of price, structure, of course, can tell us directionally what the market is attempting to do, and time marks acceptance of price. Time, volume can also mark acceptance of price. If we're looking at this profile, the market moved higher and ranged here. This is the volume profile. This is value from TPO charts. This is value from volume. So when we're thinking about the auction process, it is important, even as day traders using a 5-minute chart, to understand the market structure over time in multiple time frames. You may be looking at a 5-minute chart that looks like it's getting killed on a big down move that's part of an area of balance in a different time frame chart. Here's that area of balance on the 30-minute chart. And this goes for monthly, weekly, daily, and lower time frame charts. There's always counter auctions in smaller time frames. It's important to remember, and this is what the TPO charts or market profile charts tell us. The market is accepting price at this level because it's spending a lot of time there. Michael Wright, $1 million. Brandon, that wouldn't be able to pick myself out in that chart, but I was there the day that was taken, because I started on the trading floor before that trading floor opened. There was another trading floor, and then I was also there the last day it closed. Been around that long. Order flow. There's a million ways to look at order flow. There's footprint charts, there's looking at the dome, there's time and sales, there's tick stream, there's all different ways to look at order flow. One of my favorites is Delta. Options traders, you know Delta as something completely different than what Delta is in futures. Unfortunately, some platforms don't necessarily provide Delta or even accurate Delta. This would be some sort of an add-on that you might want to talk to your platform provider about, because it can sniff out longer time frame activity in the day time frame and even longer time frames. So anytime one contract is bought with a market order, it lifts a resting sell order. Lifting the offer with a market order buy is positive Delta. That would add 1, because it's one contract, to Delta. Using a market order to sell at the bid or hit the bid is negative Delta. Why is this so important? Well, the Delta number is in essence, the number of contracts trading on the offer, positive Delta, minus the number of contracts that trade on the bid, negative Delta. From time to time, and in different markets, it sometimes looks a little bit different. you'll be able to sense longer time frame trader presence when price goes opposite delta. A delta divergence can sniff out longer time frame participation. Here is a 30-minute chart. This is the S&Ps a little while back, 21st, April of 2021. But just to show, this is cumulative delta on TS Trader. You don't have to do this. Just this picture is kind of old, but I wanted to show what a delta divergence looks like. The market opens and begins to roll higher. Delta decreases in value. More traders are hitting the bids than lifting the offer. By the end of the day, we have negative 7,700 delta, but price moves higher. What is that telling us? Our more aggressive traders are using market orders to hit the bid. Any normal two-sided auction, that should push price lower, but it isn't. It isn't. Price continues to push higher throughout the day. This is one thing that would cause me not to look for shorts on a day like today. And if I were long, seeing the delta continuing to go more and more negative as price went higher would encourage me to hold on to longs, because the negative delta is created by short time frame, weaker hands, day trader, P shooters like me. They're going home flat. If there is a longer time frame buyer placing bids and just scooping up whatever they can scoop up and moving those bids up to scoop up whatever they can scoop up, and moving those bids up to scoop up whatever they can scoop up, and moving those bids up to scoop up whatever they can scoop up. By the end of the day, they're going to have our little community here of smaller time frame, weaker hands, P shooters, so short that they're going to have to go the other direction. And that's when you get these late spikes. We talk about the late spikes on the market prep, market reflection, make hog money, group coaching. We're always talking about how these late spikes are created. It's longer time frame buyers quietly and sneakily just keep bringing their bids up, enticing the short time frame P shooters like me. Well, I sold it here. Well, maybe I should sell it here too. Oh, maybe I should sell it here too. And when everybody bails out at once, we get the big late spikes. Kevin, yes, it is recorded. Brandon, we did not see divergence really on make hog money. When we were at the lows today in the S&Ps, delta was basically flat. It was a tough day to read delta. However, right now, as price continues to push higher in the range, delta is negative 2,100. So we do have a degree of delta divergence in the S&Ps here. Ion, the delta on Tradeovate is accurate, but I'm going to show you how to set it. Here it is. So you have to go to one of the indicators, the Tiki tools. You would go to indicators, explore community indicators, and scroll down till you find Tiki cumulative delta line. Okay, this is for the S&Ps. You're going to want to show the value, which it's showing right here. You're going to want to go, instead of chart, you're going to go session. You're going to go start hour, 8 a.m., a half an hour before the regular trading hour session begins in the S&Ps. Why? I don't know. It just seems to make it more accurate. Save it, then you'll have it on your charts. Okay. Now, it's not always going to be accurate. You may have to hit F5 on your Tradeovate or TS Trader platform to get it to come to accuracy. But this is how you get it. You explore community indicators, Tiki cumulative delta, upload it or download it onto your computer, find it on your indicator list, and then add it to your chart. Set it this way. Take a screenshot if you have to, Ion. Just did. Good. Okay. Everybody should screenshot this little table we've got going here. Now, this is only part of the auction process. We've got volume and open interest on this. When we take a look at what we've got price, volume, open interest, and the indication of price related to volume and open interest. If price is rising and volume is rising and open interest is rising, that is a auction that is likely to continue in that direction. Just like our auction of the Leroy Neiman painting, everybody was interested. That's high open interest. Volume, everybody was falling over each other to bid for that piece. That is a market that is likely to go and continue in that direction. If price continues to rise, but volume falls off as well as open interest or volume, they can both be warning signs. That's an indication that the auction to the upside may be slowing and a change may be coming. The market may be weakening. It's the same thing with the downside auction. If price is falling on rising volume and open interest, that is a market that is weak and likely to continue moving lower. But as price continues to fall and volume and open interest falls off, the market may be less weak and a potential change may be likely to happen soon. These changes don't mean direct turnarounds. Maybe the market's gonna consolidate for a while before changing and taking a new direction. This is just a basic table to keep handy to say, you know, crude oil, gold's been rallying, volume's been okay, but open interest has really been increasing. What does that mean? Well, open interest and rising price, strong market, or relatively strong. Volume has a way of kind of waffling sometimes, and you're going to see an explanation or a example of that here shortly. So without looking at charts, if you see price rising over time, volume rising over time, and open interest rising over time, that is a market that is in a healthy upside auction. I would give a market like this an A as far as performance is concerned. A market like this with rising price, falling volume, and open interest, I would give a D as far as performance in an upside move. And likewise with the other direction. Okay, so I know Jack has put in that link there. This is where I get the information. It's from this daily bulletin. I'll put this in the chat as well. Okay, so if I'm looking at the crude oil market, energy futures products, if I click on there, it's going to show me this. We used to get these on paper walking onto the trading floor. So this is the final. This morning, we were looking at 16,000 in additional open interest when it all actually came out only up 6,000. There's no platform that can calculate open interest on the fly. You have to depend on the MERC or the Board of Trade or whatever. You don't find out open interest on that day. You find out the next morning, and sometimes it's a little bit off, like this one was. You've got settlement price for the March contract. You've got net change. You've got volume. I won't look at the volume for the contract only. When you look at the volume in crude oil into the future, there's too much of it. You got to be paying attention to all of it. And likewise with open interest, there's so much open interest into the future. I'm collecting the total. Now, this complicates things, especially with crude oil. If we're looking for the S&Ps, only during rollover would it be very important to take all of the open interest. We're already starting to gain open interest in the June contract. Oh my God, June already. But here's settlement, the net change, total volume, total open interest, and the net change. This morning, we actually had a negative open interest, which came out positive. You can only depend on so much, because when the market is opening up in the morning, we only have the preliminary numbers. Yesterday's numbers, here's what they said here in the S&Ps. Is that right? Oh, I must have the wrong sheet here. Yeah. Okay. So the preliminary said 4,400 positive open interest yesterday. If I refresh the page, it's going to show final 3,300. So a little bit less, but I'm always getting the settlement, net change, volume, the total volume, and total open interest and net change. Okay. All right. Wally. Hang on. So take a screenshot of this, or you just remember this. The whole goal of this is so that all of this kind of becomes secondary functions, so you can crunch all this information relatively quickly, and then make better trading choices from it. Now, this spreadsheet is a way of organizing the information. It's what I do, and I manually fill in all of these numbers, and I'll show you what all this means. This is probably hard to see, so what I'm going to do is try and get last year's 2022. There it is. So this will probably be easier for you to see. I collect the date, the contract month, total volume, total open interest, total net change of open interest, the closing price, the net change, the regular trading hour delta at the end of the day, and then the regular trading hour direction. If value is higher, it's green. If value is lower, it's red. If value is inside or outside the previous day, I don't put a color on it. Okay. So let's see something here. Okay. This, give me 1 second. This is gold. This is a daily chart. This is the beginning of 2022. It's one of the most stark examples of being able to use volume, open interest, delta, and direction to your advantage. February 7th. February 7th. The settlement price in gold was 1821.80. The day before the settlement was 1807.80. Remember that. We had volume good, volume waffles the whole way up. What I want you to focus on here is the increase in open interest and the delta divergence. 1807. Volume waffles, but we begin to pile on open interest at higher levels. Higher day, higher day, higher day, higher day. This is net change in settlement pricing from the 4th, 1807.80. We're already at 1842. Open interest has been increasing the whole time. Delta negative. Delta negative. Longer time frame buyers accumulating longs against shorter time frame short traders. Missed this day. I know that we had negative delta that day. And then it continues. We're at 1856.20. Oh, we get a little bit of a pullback here, but we still have negative delta. Open interest begins to pile on again. Price begins to move higher again. Volume waffles. What I'm focusing on in this situation is the fact that we are just piling on open interest at higher pricing, and that our short time frames traders are selling into this move the whole way up. They're just getting run over. So we go from 1807 to 1910, $100 move in gold. By the time this move ends, it takes chasing out all those shorts to make this auction end. But we can already see 1926. Well, hang on. 1926. We're here. 1926. I'm sorry, 1926 here. Some of our longs are already getting out. Where are they getting out against? Price is still kind of moving higher. We have one down day, positive delta. Price continues to move higher. We add a little bit of open interest. Price continues to move higher, but now it's being perpetuated by all of the short time frame traders. Now we've got all this positive delta before we finally explode and we take all of them out. The high close 2043. We started at 1807. We got a $200 move inside of a month that if you were paying attention, you wouldn't have sold with my money. You wouldn't have sold with my money. This type of situation may only happen 3 times a year, maybe less, maybe more. It's not something that I'm depending on solely for execution. But when I see things like this, I know anytime I get a chance to buy weakness, I need to look for longs. All of my buddies, my competitors, my short time frame pea shooter, 1 lot, 2Z, 3Z, 10Z traders are the wrong way. Can you get a copy of this spreadsheet? Take a screenshot of it, Zach. Create your own. Zero delta means balanced market. Not necessarily, Caesar. There's different order types that longer time frame traders use. We can do a whole webinar about those, and maybe we will. The longer time frame traders don't always use ICE orders. ICE orders tip off their activities because of Delta. Growler orders are another story, which keeps Delta neutral. They could buy 10,000 contracts and it would keep Delta neutral on it. Okay. So this is the worksheet. This is the present, I guess, that I'm looking for everybody to have the opportunity to look at and to adapt to their usage. Downloads. I want you to just kind of look through this with me, and there's some good features of this where you're going to do the work. If you set up this outline, you use this one, whatever you want to do, this will put you in a position to bring consistency to the market. The coach's playbook we just did last week, bringing consistency to the market, you may be able to get consistency from the market. So Sunday night is usually when I start looking at the markets. I start with weekly candlesticks, long-term directional performance, if any, reachable long-term swing highs and lows, the daily I'll do this the night before and the morning before entering the market. I'm looking for directional performance, volume, open interest. Is the market emotional or is it lack of emotion? Is the market directional? Are areas of balance further apart or overlapping? This is on the daily chart. If range bound are defined levels, are there defined levels of extremes? Are they present? Put them down. Is there a structural bias, buy weakness, sell strength, visuals, thoughts? You've got to figure out how to do this for yourself. John, we're going to be sending out a link to this, or this performance worksheet Monday with the recordings of today's and yesterday's sessions. Okay, now we're looking at the profile charts. What nuances are we seeing? Is there excess tails, weak highs, lows, thin, wide, toothy profiles? Nuances, anomalies, weak highs, lows, unchecked points of control, afternoon pullbacks. Is a repair day possible? Any special situations likely today, like spikes or value area special situation days, 3i days, which I don't really focus on anymore. If anything sticks out to you, what is it? You're thinking about the markets, you're thinking about the performance of the auction process. Something is going to stick out to you. Then you can do this the night before, or the day before. I tend to do both. Then create hypotheses. From what I'm seeing, the market has good performance moving higher. You know, the market's going to open. I'm going to look for a pullback and see if I can find buy weakness. Hypothesis number one. Hypothesis number two. Numbers at 7:30. Anything can happen. If the market opens in range, I'm going to stay patient. Whatever your hypotheses are. Then pre-session, 30 minutes before the session, I'm going to be focusing on the 30-minute candlestick charts and the profiles again. Any known economic releases, any substantial overnight positions, overnight inventory, any significant inflection points within reach, weekly kickoff levels, naked points of control, perhaps. Settlement, overnight high, overnight low, half back, or the point of control from the overnight. Set up your hypotheses again. They may have changed from last night. Review those hypotheses, think about them, breathe, relax. On the open, profile charts. Are we inside or outside of value? Are we inside or outside of range? Do we have a gap? Opening range at one extreme. Was there confidence? Initiative or responsive activity off the open. Don't really worry that much about initiative or responsive activity off the open. Is one of your hypotheses coming true? The earlier you can figure that out, the better off you're going to be. Stay calm. These little blue lines here are just to kind of remind us. Stay calm, look for the best location and demand it. You're looking for cheap trades. What about the first hour of trade? Profile charts, initial balance wide or is it narrow? A narrow initial balance is more likely to be extended. Is there evidence of one-time framing? Don't fight one-time framing. In other words, higher highs and higher lows, or lower lows and lower highs. Is the range inside overlapping or outside the previous day's range? Value area migration, point of control migration. Is the point of control moving one way or another? What might the finished profile look like? What day type is likely in the first hour or just after the first hour? Delta congruent with attempted direction? Is there a divergence? Any nuances been checked or revisited? What did not happen? Because what doesn't happen can be as equally or more important as what does. Each trade is unique. Let go of venom and trade from zero. Later the day gets, the easier it may become to determine the final day type, but it may be too late to take advantage of this information. The earlier you can hypothesize this, the greater your opportunities. Remember, everything is hypothesis and anything can happen. Trade what you see and look for the cheap trades. There's also some reference to the market profile details, vocabulary, day types, and what some of those day types might mean. So you're getting a little book sheet, a little workbook here, and I suggest you make it your own. This is a good start. This is a good start, and I'm happy to bring it to you. Usually, this is something that I have been giving to personal performance clients, but today it is yours. Preparing for the workday. What are we looking for, Zach? Which delta indicator on Trading View is best? Oh, Zach, you're going to get an email that's going to bring you the worksheet. Yeah, you don't have to worry about that. Monday, I think that email is going to go out with this worksheet. And I'm hoping that it really makes a big difference to everybody. Just being prepared. You know, there's times when I'll have through 2, 3, 4 hypotheses. I can cancel out, okay, hypothesis number 1 is wrong, 2 is wrong, 3 is wrong, 4 seems to be working out, and there's a strategy for that. Yes, the recordings for yesterday and today will be part of that email, I believe. Isn't that right, Jack?
It is right. Yeah, Monday. Full disclosure behind the scenes, the person that takes care of our email automation is out, and yeah, we'll send it. What do people want? They want a PDF or like a Google Doc or something like that?
PDF, Bob P says, yeah.
Well, Bob P. Yeah.
PDF.
The PDF team is in there.
Yeah, right. Right.
Come off camera. Yeah. So Hogue, not quite as many. We got to a lot of questions there. There's a few still hanging out there. Trader Wannabe is asking, so
TPO icebergs and ledges. Ledges in the profile tend to be kind of mechanical short time frame levels for execution. When a ledge falls, there's always going to be a bunch of stops above or below the ledge. It doesn't even have to be created by an iceberg order, though sometimes they are.
And then only one left in here, which is Dan asked, which delta indicator is best in Trading View?
That I don't know.
Yeah.
I'm not that familiar with Trading View. If anybody does have the delta on Trading View, if you would comment on that, that would be good.
Let's see, do we have a video about volume profile and stuff? We don't at the moment. We could. Generally, I think we make videos and stuff. We kind of look at the help center, what's popular or what's being asked about, but we could at some point, certainly. Yeah, just a reminder, we'll send out the video for this on Monday. We'll have a PDF of the worksheet as well. It'll take you to a landing page where both videos will be. And yeah, enjoy. Thanks, Hogue. See if there's any
Thank-
other questions that trickle in here. Oh, yeah. Okay. So there were two questions that I wrote down to get to. Okay. First one, I'll say both of them now so we can
Sure.
designate. All right. If Hogue can go over the settings in his TPO chart.
Okay. Yeah.
And then while you're getting that, the other one was that spreadsheet that you had with open
Yes.
interest. Is that something that you're like? I just assumed that you were pulling the open interest from CME or something like that. But are you updating those manually?
Every night.
Okay, well, wow, good
Every day.
stuff.
Every night. And I'm doing it for 3 markets. Last year I did it for 4. But if there's
Cool.
like time off, if I take a week off, it's so hard to go back and collect all that information. Usually I'll just skip it and start over.
Yeah, and if you want to start your own, if you go to the CME website, you could download CSVs of all of the open interest and volume information for whatever
Mhm.
product you want. Also, someone asked really quick about the hours for products again. Once again, like the CME website's a great resources for those. But I remember you said them all in like a sentence the other day, Hogue.
Yeah, so your equity index futures are regular trading hours 8:30 to 3 p.m. Regular trading hours for crude oil and natural gas are 8 a.m. to 1:30 p.m. Gold currencies, gold, the regular trading hours are, get this, from 7:30 a.m. Central to 12:30 a.m. Central. Those guys, when they were in the pit in New York, really had a good thing going. They were done with their day at 1:30 Eastern time. And then treasuries and currencies, 7:20 really is the open for gold currencies and the treasuries, 7:20, but the currencies and treasuries close at 2:00 p.m. Central. Okay,
Cool.
so here is how my TPO charts are set. Okay, this does not have the added session of overnight. I'll show you that in just a second. If this is even the S&Ps, it's the TPO chart. I want the letters. I want each TPO to be 1 tick. So I put that there. I do not want it to auto size to the page. And then I want the letter colors per letter. So you'll have to go and change each letter by just doing this. Whatever letter you want it to be. And then apply and save. Okay. One thing, as far as the initial balance extensions, it's going to give you 100, 150, 200. That's fine. I don't worry about that too much. The TPO point of control is really hard to see. Even on a white background with the point of control black here, it's hard to see. We'll see that in just a second. I set my value area at 70%. And I want the color for the value area to be, again, it's in black, but it's very kind of light gray. Okay. Volume profile is much easier to see, especially with the point of control and the different colors. This is, I think, default. Okay. Again, 70%. Indicators, I don't have indicators really on here. Show fills, I don't have any of those things. And then I've just got 100 minimum number bars to load. Okay, so I'm going to hit apply and save. So that's where the colors come from, because I want to be able to see in the profile. I know this is early trade, this is middle of the day trade, and then we start getting into darker greens and blues at the end of the day. If you want to add the overnight session, okay, which is this. You're going to go to the same spot. You're going to go to configure chart elements, click on ES30. Now you can have add session, and that's going to add the session. And the overnight in the S&Ps is from 5 p.m. Central, 1700 military to 8:30. And then the regular trading hour session takes over at 8:30 till 3 o'clock. Everything else is set the same. One of the things about, again, that point of control on TS Trader, if it's on a light platform or a dark platform, the TPO point of control is hard to see. This stark black line, the volume point of control. This hard to see little gray line here, that's the TPO point of control. It's a little bit aggravating. There are a few things that I would add and that I would change to this, but I do like it because it's easy to look at a long time or open things up a little bit.
Yeah. If you could just generalize, Hogue, if delta is positive, does it mean the rise in prices have strength?
If delta is positive, it means, well, usually if a market is moving higher, it's more aggressive buyers lifting offers. It's what you would expect a market moving higher would do, would be increasing positive delta. So that would be expected behavior. When it's the opposite is when you got to notice. You got to be able to recognize that. So a market that's moving higher on positive delta, there could be any number of time frames involved in that. Doesn't necessarily mean it's a strong market. But there are times when it's going to. Nothing works exactly the same way ever twice in this. It's what's so aggravating and so enjoyable about trading, right?
Oh, indeed. Such good times. So yeah, thanks everyone for showing up. We got to kind of cut it here. Probably, Joe, if you come to group coaching, we can show you those settings for the gold as well. But for now, thanks for showing up. It's been a great 2 days. Hogue, as usual, killing it there. Clearly enjoy talking about this. So
I do.
Stuff.
I do. It's what I do, right?
It is. So feel free to sign it off.
All right. Well, thank you, everybody. And look for a bunch more stuff coming at you. We're going to try and ramp up the opportunities for us to spend more time together. I know I appreciate all of you. Get out there and profit, ladies and gentlemen. Consistency. Look forward to getting that worksheet on Monday and make it your own. If you don't look at profile, what do you look at? Adapt it to what you look at and start hypothesizing and looking for those hypotheses to come true. Have a great rest of the day. Have a great day tomorrow if I don't see you, and a great weekend. Be kind to yourself, be kind to others, say a prayer for peace, and we'll see you soon.